This is CC. Welcome to the Orbit. It is Tuesday, December 19th. We have futures slightly higher this morning. Once again, we're looking at the SPY up about 0.25% pre-market. That is taking it to about 473 pre-market. The expected move for today was up near not even 474. So we're about, let's call it halfway, 2/3 of the expected move already pre-market. This is the trend. We've been seeing this bid higher in the morning type market for weeks now. If you have friends or colleagues that have been trying to short this market, I don't know what to say at this point other than maybe tell them to watch the Orbit. We've been talking about this forever. These are the underlying conditions of this market into year end at least. Low volatility, slow grind higher conditions. What that does mean from a option selling standpoint is you have very tight break evens and very tight expected moves. Take that low volatility information into account, how tight those expected moves are. However, also how small realized vol is day to day. And, as we always look at, maybe look at the expected move, maybe go a little bit outside of that. The premiums are not high right now at these low volatility levels, but either is realized vol. The market is not moving much day to day. And those moves right now, at least for right now, tend to be slow grinds higher. Moving on to QQQ, we see it up about let's call it 0.2% on the day. The expected move for the day is about 0.5%. That is down. That's lower than what we've seen over the last few weeks. Let's look at IWM real quick. That has been an interesting one as it's gotten up near that 200 level. And we are right there again this morning at about 199. The expected move for today is about 1.3%. You can see it's higher, but you can see what's happened here. We've launched up towards that 200 level. It's found resistance and it's been going sort of sideways, but it's been doing that several times over this rally over the last month. It sort of hits a gamma pin. There's a ton of open interest up here at the 200 level. It is going sideways. It is having a hard time breaking through in one move. However, keep an eye on that because eventually the way gamma works when you have a slow grind higher where you have this sort of stair step climb higher is that the stock or the indices go up to that level. They find lots of sellers. There's lots of open interest on that 200 line, for example, here. If IWM were to break through the 2000 level in the Russell and the 200 level in IWM, what that would entail is it gets through 200 and a lot of that stock that was to be sold versus those long calls on the 200 line, it gets exhausted and the sellers are basically done with their selling against their long options. And that's basically the way that works. And then once that's exhausted, it has the power to be able to go through. Or what often happens is it actually gets rejected and that those sellers were enough to sort of change momentum. Finally, let's go back and let's just, we're talking about these low vol levels. Let's go back into SPY. I wanted to look at the volatility and the IV levels and on the longer term. So if we look at the next couple of weeks, we've got some really low vol in here. We even see this 9, a single digit. That's December 27th expiry. So that makes a ton of sense. Holiday week. January, we start off, it's still quite low, 11, 12, 13. You see it start to creep up. 14, we're into April, 14, 15. And then out by, a year from now, you're out into 16. So, but that's a year out with volatility just 15 or 16. So for those looking at this chart and saying, I want to position bearish in 2024, for those looking in this chart saying, I'm bullish, but I want to have very defined risk trades to the upside so that I don't get caught off sides on any kind of reversal. Well, the options market is quite cheap and you don't have to go Like we're looking at, let's say you thought the 500, a run to 500 on the upside in SPY was possible. We're looking at into April expiration. So that's the type of trading that one could be looking at. I think SPY is going to 500. I'm looking at April call spreads, for instance. That's just an example. But I just wanted to show the low volatility and how that has carried over and permeated all the way out on the options chain. Those looking to take advantage of low volatility do not have to guess that the market is suddenly going to get more volatile in the next week or two or even 3 weeks, because the options market is basically saying you don't need to be that specific and that correct of when this market changes. If there's going to be a breakout to the upside or a reversal to the downside, you have months to position for that to happen.